It makes a horrendous time just a little bit easier, doesn't it? A tiny bit easier.
Yeah, I find it's always a difficult conversation. Is it's sort of you're doing a mortgage for clients. It's like a happy time for them to buy a house, but our job is to balance that out and just let them know that if the worst was to happen. Hi guys, welcome back to our podcasts. Today we're going to talk to you a bit about protection. First of all, we're going to talk about life cover, life insurance.
Very riveting.
Yep. It might be a bit of a boring one to be honest, but it's quite an important topic that we need to talk about. Darren, do you want to give us a summary about sort of what life insurance is and why it's relevant to a mortgage?
I think although it's not mandatory when you're talking about mortgages, it's something that you probably should consider, just because it covers you, your family, or if you're looking to take it out against the mortgage, it'll cover the mortgage in the event of you passing away. I think it's also if you are been diagnosed with a terminal illness as well, where fortunately death is inevitable, they'd also pay out on that as well.
Yeah, I think there's only two certainties in life: tax and death. So it definitely is something that's important. I think so. It's paid as a lump sum, Rev. Is that a tax-free lump sum, and sort of how does the money get distributed once it's paid out?
It is, in most cases, is a tax-free lump sum that they would get in an event of death or terminal illness. How it gets distributed is subject to how it's been set up. So you could, if you're like a single person, you could set up your policy in a trust, which means it is outside your estate, and you are nominating somebody, could be a family member or anyone for that matter, that will receive that funds from your life insurance policy since you're no longer there anymore.
Cool, perfect. And then if you're buying with your partner, I assume that it just goes.
Yeah, exactly. If you're
surviving partner
buying with your partner, it's the most simple insurance policy because it pays on death or terminal illness in some cases, and if you're buying with your partner, it will just be left to the other person to clear the mortgage for. So it's a pretty simple insurance policy. It'll pay out to clear the mortgage if you wanted to.
Yeah, perfect. And then Ducky, why would you say that it is? Although I know Darren said it's not mandatory, but why would you say life cover is important to consider, or why have we got to have that discussion with our clients?
Yeah, it's definitely it's not mandatory, but it is hugely important. Like, you're taking on the biggest debt of your life. You're borrowing hundreds of thousands of pounds. If you're buying with someone, in that case, if you did die, that person wouldn't be able to, 9 times out of 10, that person wouldn't be able to afford the mortgage on their own. So it just makes a lot of sense for the other person to have the mortgage cleared.
Yeah,
should you?
I think especially if you see there's sort of one high earner and one not so high earner when they're buying a house. If anything was to happen to that high earner, then the other person would be pretty screwed if they're left with like a massive mortgage. Yeah. Especially if there's kids involved as well. It's sort of
also when there's a death in any situation, it's horrible. You're going to grieve and you're not going to function for a long time. So taking that financial stress away is hugely important. It means you can forget about all of that side of things, and concentrate on
I think it's very underestimated that you normally take life insurance because you have mortgage to look after, but in an event of that death, absence of that person can have a significant impact on the family when it comes to income and day-to-day living. The parenting cost if there are kids. So having life insurance would just mean that once you've gone, your family has some level of financial security to rely upon. And not be pushed into poverty, so to say, which could happen in most cases.
I was just going to add to that. I think like when someone passes away, you want to navigate that grief process in your own way. And I think having the mortgage paid off, for example, and if you've got children, looking after them and making sure everyone's all right, I think it's important that burden of the mortgage gets taken away immediately because that can cause a lot of stress for people.
Yeah, it's just peace of mind, isn't it? If you've got sort of a family and young kids, you want to know that they're going to stay in the house.
Definitely.
Exactly.
One, and then also that your partner's going to sort of be able to pay off the mortgage. And if she hasn't got a mortgage to pay or he hasn't got a mortgage to pay, then they might not have to work as much. They can sort of look after the kids, especially like that. It just leaves it as an asset, doesn't it, rather than a liability.
Correct. Yeah, it makes a horrendous time just a little bit
Yeah.
easier, doesn't it? A tiny bit easier.
Yeah, I find it's always a difficult conversation, isn't it? It's sort of, you're doing a mortgage for clients. It's like a happy time for them to buy a house, but our job is to balance that out and just let them know that if the worst was to happen, because let's face it, if the worst was to happen and one of you was to die and you can't pay the mortgage, bad things could happen. Like if you don't pay your mortgage for 3 to 6 months in a row, the bank are within their rights to repossess that property and take it back.
Yeah.
Whereas just having that life cover in place just means
something
it's
that's
sort
so easy to set up as well, and not entirely expensive, is it? It's not hugely expensive.
Yeah, I mean, the cost, it all depends on sort of your
lots of
personal
things.
circumstances, doesn't it? I mean,
Age,
it's quite
health.
common sense.
Yeah,
If you
yeah.
take it when you're young, it's going to be
Mm.
cheaper than it is when you take when you're older. And I find that quite interesting, is that when we deal with sort of young people in their 20s, 30s, they're like, oh, I don't need it.
Yeah.
I'm not going to need it. But they could have got it for something really cheap.
Extremely
When they
cheap, yeah.
realise that they do need it when they're 30, 40, 50,
Yeah.
it's like it can be 3-4 times the cost. So I think although you might think you're young, you don't need it, it's definitely always something to consider at any age, really, when you're buying a property.
Definitely.
In terms of the payouts, I know obviously there's some different facets to life cover. There's also like a family income benefit that you can add on to it. Ducky, do you want to talk to us a bit about family income benefit?
Family income benefit is simply life insurance that will pay out, rather than a lump sum, it pays out a monthly income to your family. So again, if you're, if you don't manage money really well, it's going to be better for you and your family, essentially. You can bolt it on to other things as well, but yeah, essentially rather than a lump sum, it'll pay out a monthly monthly income for you.
I think it can pay out a little lump sum as well, can't it? But it's
Yeah.
like separate to the mortgage. So say, for example, if you're borrowing 300,000, you could take lump sum 300,000. And then if you want to take a little bit additional for like a funeral costs or
Yeah.
stuff like that, you can just tag that onto it.
Yeah.
Why is it not mandatory, Darren?
I think, well, personally, I don't really know, actually. I
Yeah.
think it should be mandatory.
Yeah.
I don't know if I'm allowed to say that, but I think it's down to personal opinion.
Yeah.
I know in some religious backgrounds, it might be something that's actually forbidden.
Yeah.
And yeah, personally, I don't really know why
Yeah.
it shouldn't, but I think it should be. I think what it boils down to, so if we look at buildings insurance, that is mandatory because the bank's obviously involved and have a charge on the property, whereas it's not in the same
Yeah.
case, if that makes sense, for your own life.
Yeah.
Because your life don't belong to the bank, does it really? But
Yeah, I suppose so. No, it's an interesting question. I mean, like stuff like car insurance is mandatory. We always see people insure their cars, their pets, their phones, but they never really sort of think to insure their
own
life, do they?
Biggest
So,
debt of their life.
yeah.
yeah,
I always find it quite crazy, but
Mm.
it is what it is. A lot of clients that we see, they say that they can rely on family or work benefits. What would you say to that, Rav, in terms of if someone's got like a lot of people might have like a death in service from their employer, can that be used to sort of pay off your mortgage?
It can be. However, the funny thing about life is that there are no certainties, right? You may have death in service with your job today.
Yeah.
That's not to say you're going to be in this job for next 25, 30 years. And if this unfortunate event did happen and you did, over a period of time, you had changed the job, there's no guarantee that the new employer is going to pay same level or if there is any benefit whatsoever. So it's always good to have your own personal protection in place. And if there is something that the employer provides, that's add-on. It's a bonus, right? So you'll end up having more funds than you actually need. Great, but you're not paying for that extra funds, right?
Yeah.
But at least you're securing your immediate debt or you're securing your immediate family.
Yeah, I think it's quite important. I think I always label it, there's two different types of protection: family protection and mortgage protection. Stuff like work benefits or standalone life policies, they're designed to sort of protect your family. Whereas if you take something specific to the mortgage, you know the mortgage is cleared, and then also you've got something to leave to your family as well.
Mhm.
Perfect. Does anyone want to add anything else on life insurance?
We can talk about the cost in a sense, like people often don't realize that it's actually quite cheaper in terms of when you look from like for like basis, the cost of getting, let's say, £100,000 insurance or £200,000 insurance, subject to your age, in most cases is actually less than your Sky bill.
Yeah.
So that, the
I think
cost that people see in their head,
Yeah.
that it's going to be expensive, or it's for the people who have something to secure.
Yeah.
It's not always the case. Costs are affordable.
Yeah.
And B, you may not need it, but your family might need. So
Yeah.
you have to think beyond what you actually need.
Yeah, I think with the cost, it depends, doesn't it, on circumstances. So
Many factors, of
stuff
course.
that can affect it, like your age, your BMI, so your weight and your height. If you smoke,
Smoker status.
it's all based on risk, isn't it? The
Your medical history.
medical history. If you're deemed a higher risk, then it's going to be more expensive, like any type of insurance. But I would always.
Something's better than nothing, isn't
yeah.
it, in that situation?
We can work. The good thing with us as well is we can work to a budget, can't we? If someone says, I can only afford £20, £30 a month, we can tailor a solution to that need to get them some level of cover.
Yeah,
Absolutely.
I was also just going to add, you know, when you're talking about death in service, I think most companies pay between 2 and 4 times
Yeah.
your annual salary, and that might not be enough to cover the mortgage. So
Yeah.
in effect, there could be a shortfall still. So
Yeah.
you kind of always want to have something on the side. As rightly so, Rav mentioned, if you move company,
Yeah.
all those benefits are lost. Your benefits might be worse at a different company.
Yeah.
And yeah, you just want to make sure that you have coverage on the
Yeah.
mortgage, definitely, for sure.
I always say that death in service it's designed to replace your income, isn't it? If it gives 4 times your salary and you're on 50k, that'll leave your partner 200,000. That gives them 4 years of your income, essentially. So if you've got the mortgage paid off, if you've got the mortgage protection as well, and you pay off your mortgage, then you get that lump sum. Your partner hasn't got to worry about working for 2 years.
Yeah.
Totally.
Sort of, especially if there's kids involved, cost of childcare, as you guys are well aware, it's really expensive. So it's always good to have a review. As we said, there's no obligation to take it, and I think if you sit down and it's explained correctly to you and you understand the importance of it, there's no reason why you shouldn't sort of consider it.
Absolutely.
Perfect, nice one. Thanks, guys.